Whoa, good Googa Negative $600 a month. Holy wow, that is horrible. Well, that was awful. Horrible cash deal, horrible creative deal. Find a different property, I guess. Most real estate investors leave a lot of money on the table because they only know how to write offers one way, cash. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. If you're new to real estate investing, struggling, or a seasoned pro and you're looking for more options, welcome to the weekly deal analysis. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. I'm Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 20 years in the business. This is the weekly deal analysis. Let's get into the show. This week's episode, we are taking a look at 993 Starlight Terrace Way in Mesquite. I think I'm saying that right. Mesquite, Nevada, 89034. This is a 3 bedroom, 2 bath, just over 2,000 square feet, and it looks like a pretty nice home. It has been on, oh my goodness, it's been on the market for 590 days. This is the kind of stuff we're looking for here. Let's take a look at the pictures and see what they're telling us here. Pretty, no grass, but it is the desert. Terracotta roof, nice hardscapes, nice and open. So we got the front door here, dining room over here, living. And it's all just kind of one big open space. I like that. Good kitchen cabinets. Then you got your pantry cabinet over here, double ovens, cooktop. Looks like there's a kitchen table area here, maybe a breakfast nook. Yeah, that's what that looks like. Sliding door to out back, dining room. I'm guessing 1 bedroom, but really don't have. Yeah, probably the master, I guess. Yeah, I would lean towards this as the master. Vanities, big shower, big tub, big walk-in closet, another bedroom with its own bath as well. Fancy. Bedroom 3, and a hall bath, maybe. Laundry with laundry sink. We got some AstroTurf for grass. Pretty fitting for the desert, I assume. I really don't know the area. I've been out there maybe twice, but never to this area. Been to Vegas. Good yard. I think overall pretty solid house. A pretty mountain view right there. That's not so pretty to look at. Wonder why that's there. Maybe they're building more. Maybe they just, I don't know. Sun City. They got a big community pool and a pond. All right, that's all we can see from the pictures. So let's finish going through this thing and see what else we can find. See what the agent's telling us here. Care for at home. Give me the age. And maybe we'll get to that. Sun City, Flat Top Mesa. Plenty of upgrades. Interior painted in 25. Exterior within the last 5 years. New water heater. Softener in 24. New tops, backsplash, laundry, double oven. Da, da, da. So they've done a good bit of work to this thing. SID is paid off. I don't know what that is. If you know what SID is in Nevada, let me know. If it is what I think it is, then it's probably like a front foot benefit where they hook all of the sewer lines and water lines up. Indoor outdoor pools, fitness, good. Roof, taxes, under 4, built in '07. So yeah, they've done quite a bit of work to this thing. See what they're telling us here. Median age is 65, only 22% renters. Average household income is just over 80,000. They have a great calculator built into here, but I don't use that. I use the mortgage calculator from Bankrate. So our experts are saying our average value is 481, 482, and our current list price is 498. Taxes just under 4 grand. Wow, they started at 570 and have been chasing the market down for quite a while now. All right, here's some recent sales. 528, 32.5, a little bit bigger. 475. What are experts saying? What's our pricing? Based on this, we're pretty high, 425, 425. These are bigger homes too. All right, here's a 400, 42. We're a little bit bigger than that. 15. And these sold really quick, so it's not, oof, these people are likely upside down. Based off of what I'm seeing here, I think our ARV or after repair value is going to be probably that, kick it up a hair. Let's take a look at this one. I'm thinking 425, but it might be a little bit bigger or more expensive, sorry. All right, so more of a modern layout. I think we're going to stick to the 425 as our ARV. And if you don't know what ARV is, that's after repair value. What something is worth when it's all cleaned up. I don't think there's really anything that we need to do to this thing. I think it's there, but that's why it's an active adult community. All right. Well, I missed that one. So we're going to finish analyzing this anyways, but this is a 55 plus community, which is part of the reason why it is still there, I think. But we figured out everything we can here. Now I'm going to jump over to the InvestNest and analyze the cash deal. I've got it pulled up here on the InvestNest. I love this site. They just made a ton of changes to it, and I think it's a lot more fancy now. I just met with the owner of the company the other day so he could fill me in. They have a bunch more stuff that's coming. And I plan to do a podcast with him when the results are published and everything's beta tested and all of that fun stuff. So we got a few months before that's ready. So just to highlight some of the new features, everything is in here. Skip tracing, you can still do one at a time, but they also now offer bulk skip tracing, which I think is a really cool feature. And those are included in the monthly price. I think you get like 400 skip traces a month. I will have links down below in the show notes for 50% off of your first month and 1 week for free. Try it out, see if you like it. If you do, come back to this video and leave me a comment. Hey, I like it because, or I didn't like it because. We're always looking for, feedback, so I can pass it on to the owner of the company. So they're saying estimated value is 492. I think that's high from what we're seeing. Estimated rents of 1460. And really cool thing here, they got the street view. You can go up the road, down the road, look all around. They got this built in, so they didn't have this before. I like that a lot. Details about the house and the lot. Estimated value, estimated equity. Loan to value only 4%. Really good. They now also have built-in comparable sales, which I think is a really great feature also. You got your tax information, and that matches what we were looking at before. Estimated mortgage balance. They almost got this thing paid off. Original mortgage was only 138,500. Good for them. Good for them. They've been on the market for quite a while now. It looks like they took it off and then relisted as a new listing. So that, yeah, they're playing that game. All right, let's go calculate some returns. And I'm going to call this the property address. And for our purchase price, we said our ARV or after repair value is 425. We're going to do 75% of that, excuse me, 70% of that minus repairs. We already said we're not going to do any repairs because we think it's in great shape. So let me pull up my fancy calculator here, and we're going to do 425 times 70%. That gives us an offer price of 297,500. 297,500. We are going to kick this up to 4 points so that we can pay both sides of the closing costs, the buyer and the seller. Our lender's going to charge us 2 points. We are not doing any improvements, but they do have this cool feature that you can incorporate that into the loan amount. 25% down payment. Rates are, we'll make it a solid 7, and I want a 30-year term. All right, rental income, they're saying 1460. Checking with Section 8 or HUD. In this area, they will pay up to 2413 for a 3-bedroom. That's like $1,000 swing. That's a big difference. Normally I use Rentometer, but I've already used it. And again, I don't pay for it. It's a phenomenal site. I think it's like $8 a month. I really only use it to do this podcast, so I don't pay for it. You should, though, if you are looking in multiple areas. So checking rents, I like to use the handy dandy Zillow because it is pretty easy. So they're saying 25, 28, 3,000, 3,000, 23, 26, 21, 75, 31, 2,000. All right. We got a lot of good numbers here. I think we're going to split the middle on these and just go with a flat 2,000 to see where our numbers hit. We're going to say 2,000 on that. Taxes are good. Insurance, I like to factor in $125 a month or $1,500 a year. Our property manager is going to cost us 10%, and I'm sure there's an HOA here that I missed. HOA fee is $145 a month, which is actually pretty reasonable. And our reserve fund, I call it my war chest. That's 5% for repairs and maintenance, 5% for vacancy, and 5% for capital expenditures. I call it my war chest because this is real estate. It's never a matter of if something goes wrong, it's when. And to go to war, you got to have that chest of funds to go to battle. But 15% off the top every single month goes into a separate fund for all of these things. Appreciation rate on the value of the property, we're thinking about 2%. On average, I like to increase my rents by 2.5% per year, really just to keep the tenant happy, but also hedge inflation and raising taxes and insurance because I've never seen those things go down. And we are real estate investors. We do not pay full commission. Let's see if this thing cash flows. You were waiting to see if it cash flowed. I know. If you've made it this far in the show, hit that like button and share this with somebody who else might get some value out of it. Now, let's see if we can make some money on this deal. Oh, good. Googamogo. Negative $600 a month. Holy, wow. That is horrible. That is a horrible, horrible deal. Just all the way around. You're putting in 90 grand total cash invested. And wow, just awful. Mortgage payment. Where's all our money going? Mortgage payment is just under 15. Cap rate is a 3.65. That's bad. I like to see it somewhere between like a 7.5 and a 8.5. Seven's kind of pushing it, and a nine's kind of pushing it. DSCR, debt service coverage ratio. It's really an investor loan. That doesn't even hit 1.1, which would be you're renting for the same price as your mortgage payment. Cash on cash, negative 7.5%. How you get a return on investment on this, I don't quite understand. 1% rule does not work if you follow that. All right, here's where we can see where all our money disappears to. So our overall operating expenses are these here, then our reserve fund over here. Oh, goodness. This is just bad all the way around. You're in this thing for 16 years before you even consider getting a positive cash on cash return. And your cash flow, wow. You basically got to pay this thing off. Oh, this is bad. Oh, goodness. But to recoup all your original capital, you're only at 4 years, which doesn't really make sense. But I guess when you're paying on top of that too, oh, this is bad. Now we're going to go do my favorite part and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. Link for everything today, but also this will be down in the show notes. So we're thinking our ARV is 425. And on a creative deal, we're going to get a whole lot closer to that, but we still know that the numbers are way through the roof. So let's try, I don't know. Ooh, let's try 400 and see if that works. And we're going to say our interest rate is, we're going to offer them a sweet 4%. Now, PITI, what is PITI? Principal, interest, taxes, and insurance. It's your mortgage payment. For that, we're going to use Bankrate. Got it pulled up here on Bankrate, and we're pretty close on that. So we're going to say $400,000. On creative deals, I try to only put down 5% if I can get away with it. And we want a 30-year term, and our interest rate is 4%. Down to these fun figures here. All right, so our taxes are 326. 326. Insurance 125. And HOA was 145. So this gives us our total breakdown right here. We already know this isn't going to work because we're only collecting 2,000 in rent. All right, what if we try, let's try a 2% interest rate. Well, we're getting closer. So maybe 375. I mean, it's still going to be negative, but at least we got our mortgage payment below. Wow, what? I got to keep playing with this. 325. All right, so 325. Wow, that's like $150,000 off. So our principal, interest, taxes, and insurance is 1737. It's going to be 1737. Drop this down to 325. Or no, sorry. Undo. 425 was our ARV. And we said 325 was our purchase price. And our interest rate is 2 points. Oh, our potential rents are 2,000. Still a negative cash flow deal. So you would have to skim some of your war chest funds or reserve funds, and you'd have to manage it yourself to even have a shot at this thing. Goodness, that's bad. Yeah, that's real bad. Agent commission, let's see if we can throw 500 bucks at them. Assignment fee, we are not working with a wholesaler, so this doesn't come into play. Closing cost is going to be that same 4%. Cost of renos, we said we're not doing anything. And cost of holding is just 2 months of this mortgage payment here. No arrears, and a good TC or transaction coordinator will cost you about 1,500 bucks. So the cash out of pocket's a whole lot nicer, but you're still not a good deal. Well, that was awful. Horrible cash deal, horrible creative deal. Find a different property, I guess. I'm not sure if it was the taxes, the HOA, all in, it's just bad, however, whichever way you want to slice it. So this one's not going to be a good deal. So we're going to try to find the next one. Thanks for tuning in this week to the weekly deal analysis here in the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy. We'll catch you next week.